You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
Well, there's still not as many tenants as before as well. So guess what I have to do? How do I differentiate myself to get a good tenant? Drop the price. This is the snowball effect. And so with that situation, I'm going to tell you right now, that experience and going through that a few times makes all of us better investors, because you change systems, you do things much differently, but at the same time, you don't want to go through that. So to kind of answer your question, Sarah, I'm going to tell you right now, I was very, very, very fortunate that we came through that literally unscathed every single time. And it's because of the systems and strategies that we've had from day one. Is the equity. We had that cushion. So when prices did go down, even if it was an even keel of what we purchased it for, we were okay, because every year mortgages being paid off. So we weren't so dependent on appreciation. When I do my analysis for myself, for my potential investors, I use the analogy of real estate as like almost an ice cream sundae. Okay. Where there's only a few things that we have control of. And so when I analyze it, the mortgage pay down is the ice cream. Okay, that's the foundation. I know I've got control. I have to pay that every single month. That I know is the equity. That's what I know I can provide as a return. The chocolate sauce and the sprinkles is actually the cash flow. That's, again, something that I can reasonably marginally control. Okay, the appreciation is the cherry on top. Okay. Just because the markets are appreciating 10, 15% per year doesn't mean that that's going to continue on. I have no control in that situation. So even in my analysis, I always budget like maybe 1% or maybe 2%, because I don't know what it's going to be. No, none of us do. Economists don't even really know. So it's better to underestimate some of those comparisons. So to kind of reference what kind of transpired, we had a lot of vacancy. That was the biggest challenge for us and everybody. But my goal was, how do we attract some of the best quality tenants in the profile that was there? And this is where we started to change our marketing strategies, being very, very creative. And again, it makes us better investors. But for me, the properties always cash flowed every single time. And that was our saving grace, is if I just bought specifically to market and what the market to the market just to break even, it would have been a significant amount of pain. And we had people that were buying, and I'll share a quick little story, and I want to respect the time that we have. But it's one that's really important. Is we had this realtor that I know out there that, what's the right word? Arrogance, maybe the wrong word, but confidence, had a significant amount of confidence that prices were going to continue to go up and that rents were going to go up drastically. And they were on a multifamily frenzy in a lot of cases and buying like crazy, and just buying. And, this individual actually bought one of my buildings that I was selling, and he paid premium price. I'm like, thank you very much. Really appreciate that. I don't know how you're doing your analysis, but there's no way I would be buying this property at that same price. Anyway, the assumption was prices are going to continue to go up. Yeah, it's not cash flowing now, but in a few months, we'll get there. I don't know if anybody's ever heard or said that before, but they reference, it will come. If we just buy it now at this, it will come, because that's the way the markets have. It didn't come. It did the complete opposite. And there was an individual that bought multiple deals. Properties went underwater. Properties cash flow just went significantly down. And it's not even so much the cash flow, is when you're dealing with vacancies on top of that, it's like significant pain. 2016 for a lot of investors was pain. I mean, for a lot of individuals. And so when you're not paying attention and buying right, and I used kind of the references, we all have property analyzers that we're putting in our numbers. And we tend to sometimes, well, if I just make this 2% vacancy, or I make this 1% vacancy, I can get $10 a month cash flow. Let's call a spade. You are only fooling yourself at the end of the day. This is your investment. If you want to fudge the numbers, you're not fooling Sarah, Francois, myself. you're fooling you. It goes right back to what you said, Francois, earlier. Is like, what are you doing this for? So understand what you're doing this for to begin with, and be real with yourself. And so if this market doesn't make sense, find another market. There's lots of markets across the country, states, wherever the case may be. Just go with where the numbers are. So it's a long-winded answer, Sarah. And as you can see, I like to talk, but the reality is, understand there is pain that comes along with it. Real estate is cyclical. Some of the markets that even myself that I've lived in, it's had a very long run, very, very long run. I'm not going to say that we're going to have a crash. I've been questioning this whole run for years, but I've been so wrong, and I don't actually understand it. But it does happen, and history has always shown that you will see cycles. It's always to be better prepared, and the more you prepare for yourself, healthy reserve funds, number one, big one. Don't just overspend by buying more properties and spend your reserves. Make sure you have cash flow. I can't enforce that one enough. And if you have the ability, I know it's challenging in hot markets, if you have the ability to find properties that have got a little bit of cushion, those are some of the best ways to protect yourself in this game, for sure.
I'd like to talk about your marketing strategies. So you mentioned you got creative. So I'm excited to hear more. Did you start offering stuff like perks to your tenant, housekeeping? Mm-hmm. Like, what did you do to be special? Because I know price, yes, you don't want to be Dollarama. You want to offer something else for the very best tenants. So what did you do?
Yeah, like it's a great one, Francois, and thank you for asking that. Like, honestly, we had to take a step back, and we had to kind of really go back and say, okay, some of the advertising wasn't actually working for us. So some of the old school mentalities of like Kijiji and other different platforms like Kijiji, Craigslist. Like, we never did use Craigslist, but Kijiji was a big one back then. And then we had other marketing platforms. And then we had to go back and we're like, okay, we're not getting the leads that we once had. And why is that? And then we're starting to, we kind of stepped back and kind of had a powwow with our group and just said, let's understand our client and our tenant profile and who they are, what's their age, what's their demographics, all these things. And we came to the realization that, who we were targeting before is completely different than who we're targeting now. It's just a lot of people are much more on social media with Facebook and Instagram and all these different types of programs. And then this is where Facebook Marketplace become like a big eye opener for us. And so we started to kind of create our marketing strategy around social media, and then starting to really build on a database associated with that. So what we did is we started to kind of, so I've got our social media expert that's kind of really doing a lot of this stuff. So we've got another link to another website that we have for marketing itself. So we actually internally, we have property managers, but what we've done is we've actually take the advertising in-house within our own company. So our property managers don't advertise at all. And what this does is I've got my finger on the pulse, or our company has their finger on the pulse. So if a property manager says, it's been really, really quiet this week, I can say, you got 10 leads this week. Tell me about Joe, Francis, and da. And so we know exactly what's going on. So to answer even further is we took the marketing on just to have more clarity to this, have more visibility. What are some of those key pieces that were really going to be attractive to those potential individuals? So some of the ways that we did this, so for example, we would offer a plasma screen TV. Sounds kind of bizarre. 42-inch screen TV. Rent this property for 42-inch screen TV. Here's the kicker. You don't get the TV until 6 months, but you must sign a 1-year lease. Okay. Other things that we would do on the odd occasion is we would provide them with some type of a rental incentive. That rental incentive would be half month's rent. That half month's rent will not come until month 12 of the lease agreement. So again, it's the way we've kind of spun our advertising, but try to create some of that attraction. But you got to be really careful with that too, because if you got to really think about it, who are the people that are really, you got to understand the tenant profile you're also attracting in that particular segment as well. So again, it's about being creative. And I think the important message that I relay with everybody is, in times of turbulence like this, you have to be paying really, really a close attention to what others are doing. So, big companies, be it Boardwalk or Main Street, and some of these other really big facilities, they do some really unique things. We never followed suit with half of the stuff that they did because I thought it was a little aggressive. And my opinion was they're attracting a different type of tenant profile than what we were looking for. And so it's important to kind of balance that out a little bit. But the true secret to this is really to take control of our own destiny and our marketing. Because what happened is people would be, say for example, right now people are looking for properties to move into June 1st. That's what they're looking for. A year later, I know when that lease agreement's going to be coming up, and we've got this database. So guess what we're doing 60 days prior to, before the lease agreement comes up? We're starting to show them ads and provide them with information about properties that we have available. And so that's actually reduced our vacancy to like nothing. You hear all these vacancy rates, like in Alberta, significantly higher. Like I think we're running maybe, I don't even think 1.5%. We're really, really low, but it's just in regards to changing our marketing strategy. So in simplicity.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.